Welcome to our next lesson in this module on private company valuation and financial modeling. I'm going to start this lesson by showing you a very common panicked last-minute type of question that we frequently get. Help! How do I value a private company? I don't have any data and I can't find anything on it. So sometimes we get people asking us, I want to value very small businesses worth $1 million or less. Will your course help with that? Or I want to value restaurants or hair salons. Will your course help with that? And sometimes we get customers of our courses who also ask the same thing. And in most cases, I have to tell them, no, we're not going to be of much assistance with this because the problem isn't really what we teach in the courses. The problem is that you don't have any data on the company. So you need something to get started with, or else the whole process of valuation and financial modeling just does not work. It really goes back to what we covered in Module 1 on data gathering and the process of financial modeling. If you don't have anything on a company, there's no way you can value it. If you don't know its revenue or its profits or anything in between, you don't know any key metrics, you can't do much of anything. So in this lesson, we're going to start with an ideal case scenario and say that you are looking at a private company that is a client or a potential investment. So maybe you work at a venture capital firm or a private equity firm. You're considering investing in a company. And as a result, as the process progresses, they send you their full audited financial statements. They give you key performance indicators and other metrics like that. They give you the count of employees and customers they have. They break out revenue by segment. They break out their expenses by division. That's really the ideal case. And if you are working with a company, they're a signed client in investment banking, they should share that type of information with you. It doesn't matter what type of private company it is. It doesn't matter how big it is or how much revenue it has. They should always share that information with you. The problem with private company valuation, though, is that in many cases, you are not in that position. So you're not advising them. They're not your client. You're not considering investing in them, but you need to value them for other reasons. Maybe they are a prospective client, or maybe you are assisting with a round of funding, or your boss wants you to look at it for some other reason. For example, maybe they are pitching a similar company in the market and you want to see what this other company might be worth. So when that happens, you need to think about what alternatives you have for finding information. The reality check here is that if you're in this position where you are not in a position to request that information, and you are dealing with very small companies or even moderately sized companies that just happen to be private, you are extremely unlikely to get anything this detailed because most small companies are just not that well organized and they would never share this information with you anyway. One time I had someone email us and say, we're doing a research project and we want to know your full revenue and financial statements and how many customers you get per year and all these other detailed metrics. And he actually thought that I was going to share any of that with him, a total stranger. Now, I, as the owner, have no reason to ever share that with anyone. I don't even share that information with my family. Only my tax accountant knows some of that information. So you're not likely to get it directly from the source. If you're not the advisor and you're not investing in the company, once again, finding this information really comes down to the type of private company you are analyzing. So if you're looking at something like Per Se or another high-end restaurant, that's going to be a lot different than looking at something like KakaoTalk, a high-profile venture-backed startup, or looking at something like IKEA, which is a family-owned and run business, yes, but it is a very large private company with billions or tens of billions of dollars in revenue. So it really comes down to the type of company that you're looking at. In general, what you should be looking for are financial statements. Ideally, you will get audited statements, but even unaudited or informal financial statements can be helpful. So even if they do not conform to GAAP or IFRS, that isn't necessarily a huge problem as long as you can make the proper adjustments. And that's actually something that we're going to look at in the next lesson, how to go from more informal financial statements to something that you might actually be able to present to the SEC or to some other governing body in your country. You also want a sense of the key metrics for the company. So the widgets they sell, the number of customers they have, the number of patients or potential patients, the number of subscribers, the amount of foot traffic for retail stores. So you want some sense of that because in all likelihood, you are going to tie their future revenue and expenses to these types of key metrics. So you want a good sense of that as well. Then, beyond just the financial statements in these metrics, it's very helpful to have revenue and expenses by segment, to have sales by customer, and anything else like that, sales by geography or sales by product line. Those can also be helpful as well because once again, you're going to be tasked with creating some type of financial statement projection for this company if you're valuing it in any way. If you're using a DCF, you certainly need that. But even if you're just using comparable companies or precedent transactions, you're still going to end up creating some type of near-term projections for the company. And then finally, organizational information is very helpful. So information on the number of employees they have or what type of governance is in place at the company, what type of board of directors they have, what the management team looks like, policies and procedures and things like that. It can be very difficult to get this type of information, but it's useful because it helps you decide what type of private company it is. So is it a real small business without much of this in place? Or is it a mid-sized growing company that actually has these policies? Or because of the fact that it raised money from venture capital investors and other growth equity investors, does it have to, by definition, have a board of directors simply to represent many of those investors and their interests in the company? So those are the types of things that you want to look at. Now, finding this information tends to be time-consuming, but often plausible for large private companies and startups, and tends to be much more difficult to impossible for true small businesses. So we're going to go through the first case for large private companies and startups first, and then we'll turn our attention to what you might do for much smaller businesses. The first and easiest thing to do here is to do a simple Google search for the company name and then investor relations. I have an example for J.Crew on screen because they were public, but then they were taken private by a private equity firm. But despite that, if you go and look at their site, they actually still have publicly disclosed annual filings, very similar to, if not the same as, the exact same SEC filings that they filed when they were a real public company. Now, the reason this happens is because they still have publicly traded debt. So in this case, bonds were used to finance a leveraged buyout transaction. The company used to be public, and since they still have some publicly traded securities, the bonds, they still disclose their full financial statements. So a company doesn't necessarily need publicly traded stock to do this. Even if they have something like bonds or preferred stock or some other type of debt or funding source that is publicly traded, you will often be able to find this type of information. Now, if it is a real private company that has never been public and never been taken private by a private equity firm, you're probably not going to be able to find this. You might get lucky, and some companies, IKEA is one example, some companies will actually disclose annual reports or give some of these metrics, even if they don't disclose everything. In certain time periods, you will be able to find it, so don't necessarily underestimate this method, even if you think it's unlikely to work for your particular company. Now, if that doesn't work, another method is to look in the business registration database in your country. Now, for US-based companies, this is useless because it doesn't really exist. Yes, the SEC, the Securities and Exchange Commission, does have a website called EDGAR that lists this information for many US-based companies that are still private, but they don't really have much in the way of helpful financial information. They give a lot of information on securities the startup has sold, so if someone sold stock in it, or if it raised funding recently, they will post notices of that. But in general, you're not going to find much financial information there. However, in some countries, that's not the case. One example is Australia. And if you go to the URL that I've listed on screen, abr.business.gov.au, you can actually look up companies there, even private companies, just by searching for their name. And you will often be able to find very helpful information that you have to pay some small amount, $10, $20, something like that, to purchase. Now, this doesn't work in every country. And no, before you ask, I don't have a list of all the databases for all 190 or 200 something countries out there, but you should be able to find this without too much effort on your part. And it's always worth looking up company names in your local database just to see what's out there. Now, to show you just how helpful this can be, I'm going to pull up the actual document that I purchased on the site about Atlassian. And you can see how detailed it is. It's around 75 pages in PDF format. And not only do they give a lot of information about the company's business, but if you keep scrolling and you go all the way down, they actually have a financial report and they actually give financial statements. Maybe not presented exactly the way that you'd see them for a public company, but they actually have their financial statements right here, listing their revenue, their expenses, net income, assets, liabilities. So they don't go back that far. They only have about 2 years of data, but it is still far more helpful than having nothing at all or than staring at your screen and wondering what to do. So don't discount this method. Depending on the country you're in, it can be very helpful. I used something similar to get a lot of the information on Suntory, a Japanese company, in that case study, where I just looked in their local database, which was more difficult in that case because it was not in English, but I found a lot of information and filings on the company there, even though technically it was private at the time of the case study. Now, if that still doesn't work, another trick that you can use is to do a retroactive check. So if the company was acquired or it went public, you can check the acquirer's financial statements or investor presentations, or look at the company's S1 registration statement or the equivalent in your country for companies that are about to go public. With Kakao and Daum, for example, they actually disclosed their separate financial statements after the deal had taken place. So if you go in here, you can actually see Kakao's income statement listed separately, and they have some balance sheet information for the company as well. So they actually disclosed all of this. Now, they don't go back too far. They only go back about 1.5 years or 2 years. So we're still somewhat limited, but that's actually how we got the information for both companies in this case study. We literally went to the investor relations site of the acquirer, looked up financial statements, and found a lot of it right there. They also had some investor relations presentations that were quite helpful. And if you go through this and take a look at what they have, they give measures and indications of the company's monthly active users, both domestic and worldwide. So we got a lot of this information just by going to their website and looking in what they had there. Now, of course, this only worked because Kakao ended up being acquired by Daum anyway. If you don't have a situation like that, it's going to be much more difficult. However, if the company was thinking about going public, you will often be able to find information and stats like that. With Skype, for example, they had filed an S1 registration statement because they were planning to go public, and then Microsoft swept in and acquired them. So in a case like that, you can also just look in their filings, and they have to disclose audited financial statements there. So you can get a lot of the information and the key metrics like that. So those are a few of the top methods I would recommend for gathering data on private companies and startups. If none of that works, then the truth is that you're probably not going to be able to do much. So if they're not a client, they're not a potential investment, they haven't sent you the information, you can't find anything in terms of annual reports or investor relations on their site, they haven't been acquired, they haven't been about to go public, you're probably not going to be able to build detailed projections or an in-depth valuation. And that's just how it works. And there's not much that you can do about it. Now, you might be able to find some simple stats like revenue and users, the total addressable market for drugs if it's a biotech or pharmaceutical company. You could look at industry-specific databases and publications like Crunchbase from TechCrunch or BioSentry. You can look in press releases and get rough estimates for revenue or users, for example. You can also look in equity research and often get reasonable estimates there because sometimes they have access to industry data that you don't have. And as a last resort, you can also look in paid databases. Privco.com covers private companies. Hoover's, Capital IQ, FactSet, and others also sometimes have information on private companies. Let me warn you in advance, though, that these sources, despite being very expensive, are not always that helpful. For example, one time when I was researching the Atlassian case study on the site, I actually paid for a rather expensive report on the company from Privco.com. I forget the exact price, but it was at least a couple $100, maybe more like $500 to get this on the company. And the only useful information they had were the stats on revenue, employees, and revenue per employee over the past few years for the company. Now, these were helpful because they do go back further than the actual audited statements that I found on the Australian government site. But if you look at the rest of this report, it's largely useless. In fact, it's so useless that I'm not even going to link to it in this lesson. When I bought this and spent the money on it, I was really annoyed, to be honest. So they have a bunch of information on lawsuits and other things that they were able to find, but very little financial information. So I paid hundreds of dollars for this report and then about $10 for this report and got significantly more useful information. So don't necessarily assume that just because something is a lot more expensive that it's a lot more detailed. Privco, again, can be useful for large private companies. In my experience, they're not quite as helpful for cases like this, where the company is much smaller or where they've never publicly disclosed much of any information because they're so new. So that covers the case of handling a larger private company or a startup that has been venture-backed and therefore funded by outside investors. What do you do if you have a real small business? So something like our company or something like a restaurant or a law firm or a hair salon. Well, the truth is that it's going to be almost impossible to find much of anything. And certainly you're not going to be able to find much of anything online. If you do look online, your best bet is to look in press releases and see if you can find interviews with the staff or the management team or the owner or the founder of the business and see if they give any indication of revenue or number of locations or the people on the team or other metrics like that. If you cannot find much of anything, you can't even find this, then you should probably just give up on a detailed analysis. Really, for companies like this, unless they are clients or potential investees because you're working at an investment firm and they've given you this information, it's going to be almost impossible to find much of anything. Now, I've seen some sources suggest that you don't need all this, that you can just take a random small business and look at typical operating margins for publicly traded companies that are similar and look at other metrics like that and extrapolate and try to guesstimate your own numbers and then just use those. I strongly recommend against that because it sort of defeats the purpose of having financial statements in the first place. If it were that easy, then all companies in the industry would have the same margins and the same growth rates. But of course they don't. So I don't really recommend that method, and I don't think it's terribly helpful, even though I am aware that some other people suggest doing things like that. If you are in an emerging market, so let's say somewhere in Latin America or Africa or a place like China, Russia, India, although many of those actually it's debatable whether or not they're really still emerging markets. We'll just go with that anyway. If you're in a place like that, you're probably going to have to call around and ask a lot of different people that you know and do some local networking on the ground and see what you can dig up about a company like that, because there tends to be almost nothing about them in online sources or databases like this. Now, with all that said, there is one option for valuation if you really cannot find much detailed information, you can't get financial statements or much of any financial information on a company. And that is to use very simple, crude metrics like revenue or monthly active users and then use those to value it. So I have an example here for a blog post that someone wrote on this topic. This is right after the WhatsApp deal took place, and he did this comparison where he looked at Instagram, Snapchat, and Tumblr, a little bit like what we're going to do in this course actually, and then point out what various companies paid for these other companies or proposed to pay for them in the case of Snapchat, and has some stats about the photos shared and the users and the posts for Tumblr, for example. So you could do something like that. And my point in listing this is that it's not necessarily crazy to value a company, especially a tech startup, on the basis of monthly active users. In fact, in our valuation, we're actually going to be doing this. For the M&A comps, one of the metrics that we track is monthly active users. And you can come up with an enterprise value divided by monthly active user multiple, just like you can come up with an enterprise value divided by revenue or EBITDA multiple as well. So don't necessarily dismiss this out of hand just because it seems a little bit hand-wavy and less formal. Sometimes it can still be helpful. Again, you won't be able to do a detailed analysis or build a 10-year DCF or anything like that, but you might be able to get a rough sense of what a company might be worth. Of course, the drawback is that, again, you're not going to use this for a hair salon or a restaurant. You're not going to go to a hair salon and say, well, maybe if I camp out at the door and I count how many people go in, and then I look at how many people go into other hair salons in the area, I can come up with a very rough analysis based on that if I can find some financial information. You should probably just give up and stop camping out outside and being a stalker like that. So this method works well for tech startups and anything that can be valued with these more creative metrics. It wouldn't work so well for more old school small businesses. That really takes us to the end. So let's do a quick recap and summary of data gathering for private companies. It's mostly plausible for larger private companies and funded startups. In general, you should look on the company's investor relations section of their site or look up annual reports or other keywords like that. Then you can check the business registration database in your country. And then you can do a retroactive check if you're doing a case study after the fact and the company has already been acquired or gone public, for example. If you don't have any luck with that, you can look in press releases, you can look in equity research, try to find other companies in the industry that might have mentioned the transaction. Often equity research will actually point out recent significant transactions and give some metrics around them. And then you can look in those paid databases, which I've found to often be useless, but sometimes they have some useful information. And then for true small businesses, all I can say is good luck. Really, if you're not working with them as a client and you don't have that information, you're not a prospective investor, you don't have their information memorandum or offering memorandum or anything detailed like that, you're probably barking up the wrong tree and you're probably not going to be able to do much of anything detailed there. So that takes us to the end of this lesson. Coming up next, we're going to be diving into Excel finally in this module and looking at the financial statements for Breaking Into Wall Street, our company, or at least fake financial statements that I've made up. I've made up all the numbers here. And then see how you might convert these to GAAP or IFRS compliance statements and how you might have to change around some of the numbers to remove some oddities and strange things that you would not see for normal public companies. So that's coming up next. And then after that, we'll get started with the Kakao Daum case study and go through financial statement projections and get into the valuation there and see exactly how that works.